And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alix Steel, taking you through the closing bell. It's a global simulcast. It starts right now. Carol Massar and Matt Miller joining us from the radio booth. Scarlett Fu and Tim Stenovic off on this day. We welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Yeah. Remember, Carol Massar, Monday we were looking at what? One of the worst days for stocks in a couple of years. And today we're looking at one of the best days for stocks in a couple of years.
Exactly, right? What a wacky world. I'm calling it the manic market week because it really feels that way, right? On Monday, everybody was, or not everybody, but some people were saying we need an emergency Fed cut. I just said to Matt, I'm looking forward to September 18th, that next Fed meeting, because that's when we're going to ultimately know kind of where we go.
I'm looking forward to September 6th, which is the next non-farm payrolls number. I think that's really what set us off on Friday. And you know, we had a number this morning on the labor market that looked a little bit healthier, and that's one of the reasons that we continue to be up near the end of the close today.
I have such a hard time believing that jobless claims alone lifted the equity market, and I know what the chart shows me, but it just makes me feel like, were we going to go there anyway based on the market action? I mean, we faded so hard to the close yesterday. I'm still skeptical.
I love this. This is like, you know, remember when everyone was trading off jolts and all these other little things that were noisy and didn't matter? Are we back to that now?
I don't know. Yeah. Maybe. I don't. But
yes, yes, we are. Because you know what? Yesterday you had a bad auction, Treasury auction, and that's what turned us over. If you watch the charts, today we had a pretty weak Treasury auction too, and we continue to rise because of those jobless claims.
Yeah, absolutely. Well, at least for one day here, the market has a reason to celebrate here. We'll see whether this actually holds into Friday and the rest of the week. But basically, you have about 90% of the S&P in the green. That's going to help it close up by more than 100 points, or about 2.3% as we wait for these numbers to settle. The Dow Jones Industrial Average up almost 700 points, or 1.8%. The NASDAQ Composite up about 2.9%, a 3% gain for the NASDAQ 100, a 6.5% gain for the Philadelphia Semiconductor Index, and the Russell 2000 getting in on the action as well, Carol, higher on the day by 49 points, or 2.4%.
Yeah, pretty significant. S&P 500, most names in that index. Alix, higher today, about 457, gaining ground, and you only had about 45 to the downside.
Yeah, I'm just looking at the pie, the IMAP, right? It's just basically green with a teeny bit of red. It is a full green pizza with a sprinkling of tomato. But volume is also really light, too, guys. I'm having a really hard time taking this price action seriously.
Yeah, I agree. I mean, I don't know. I just feel like we've been whipsawed throughout the week.
If you got to sell stock, then you're going to take it real seriously.
Well, hey, guys, sorry, just to interrupt. We got Paramount earnings crossing the wire right now.
Yeah, let's get to it. And here's the big headline, right?
The
second quarter results, including, another one with charges, $5.98 billion charge for those cable networks, and remains so that story, that narrative. Warner Brothers Discovery last night, that concern that those TV networks, the value, it just isn't there anymore, and we continue to see write-downs. Yeah, you look at the TV revenue in the quarter coming in light, $4.27 billion in the most recent quarter. Their direct-to-consumer revenue, this is basically the streaming business, also coming in light, $1.9 billion here. So this is not necessarily a growth story, even subscriber growth. Total subscribers right now to Paramount Plus at 68 million. The street was looking for 71 million. And then, as you just mentioned, Carol, of course, that big charge, that write down of assets, $6 billion. You compare that to the 9 million over at Warner Brothers. And yeah, if you're in the linear TV business, not looking.
It's got to be some solace to David Zaslav, right? Because his stock has been hit all day because of the light TV advertising number, but really because of the $9.1 billion write-down that they reported yesterday. So today, Paramount does something very similar, not the same in size, but about 0.2%. And you see the shares, were they bouncing back and forth between gains and losses? And right now, only down 1%, but maybe that's because it was priced in. Paramount was one of the biggest losers on the S&P 500 already today because of, I guess, sympathy with the Warner Brothers report yesterday.
I do have to say, though, guys, revenue at the streaming services, it did jump 13% to $1.88 billion. Now, they did lose some subscribers due to the end of a distribution agreement with South Korea's TVing, but nonetheless, you did have that revenue jump 13% to $1.88 billion.
Yeah, and they're also talking about cost savings. They say, some commentary, looking ahead, we will continue to aggressively execute our strategic plan, which focuses on transforming streaming to accelerate accelerate profitability, streamlining our organization, including at least $500 million in annualized cost savings, and improving the balance sheet by growing free cash flow and optimizing our asset mix. So, listen, they're focusing, too, on cutting costs.
A lot of other earnings coming out now, including from Expedia, a beat on the top and bottom line. At least that's the initial read here. Adjusted EPS in the most recent quarter, $3.51. Street was looking for $3.12. Revenue in the quarter, a beat as well, $3.56 billion. A beat on cash flow as well. I'm not quite seeing any guidance here, but of course, a lot of people really tuned in to what these travel agencies are doing, given some of the concerns about softness in consumer spending.
Looking at the total gross bookings coming in at $28.8 billion. That's slightly above estimates, and it's an increase 6% on a year-on-year basis there.
Yeah, I'm looking at the press release, too, and they're talking about, they talk about that 6% growth in gross bookings, revenue growing 6%, pleased with their momentum and the sequential improvement in their consumer brands. However, they say in July, we have seen a more challenging macro environment and a softening in travel demand. We are therefore adjusting our expectations for the rest of this year. That coming from the CEO of Expedia.
Yeah.
Oops is right.
And it sounds a lot like what we heard from Trip a couple of days ago. It sounds a lot like what we heard from Airbnb yesterday. So it does look like, in terms of making bookings and travel, bigger ticket spend, it's hard for the consumer right now.
All right, let's actually go back, of course, to one of the most talked about stocks out there, and that is Paramount. The shares moving slightly higher here in after hours trading. And I wanted to go back to this idea here as to sort of what the turnaround is. I mean, we know the Skydance deal still going to take some time, of course, for this to close and for some of the changes by Ellison to get made here. But the big question is sort of what is the future of this company? Is it this sort of conglomerate that it once was, or is it going to be broken up into something else here? Because when you look at that write-down, $6 billion, and we're talking about acquisitions that were just made in the last 5 years for Paramount. For Warner Brothers, it was in the last 2 years, and you're already writing those down.
Yeah, I mean, that's a great way of phrasing it. It's like they're making money on streaming. Their streaming subscriber growth is good if you just discount what happened over in South Korea. They're making money off of it, but that linear TV just can't seem to make it. But what are you going to do about that? And how do you break that up? How do you monetize it? And clearly these guys don't have the answers yet.
Just one point on that, too. I know we're focusing on the TV revenue, which was awful, down 17%. But then as their theatrical revenue was also down. And then, of course, their filmed entertainment revenue was also down as well by double-digit percentages here. So this is a company that almost across the board is struggling.
Yeah, all right, let's go to Sweetgreen here because those earnings are out as well. So the loss per share in the second quarter came in at 13 loss per share there. The revenue coming in at $184.6 million. That is better than expected. Revenue beating estimates, guys. You all like those $25 salads, and they're making the money.
Sweetgreen.
Well, why really? Like, you can't get a salad for less than
I don't go a lot, but I really do like it.
By the way, I go to Sweetgreen almost every day, and I've never paid $25 for the salad.
20?
So you might be going to the wrong one.
Maybe. I still think they're really expensive, but fair enough. I mean, they're clearly making the revenue for it there. You look stock up over 10%.
All right, another stock out right now, Lionsgate, of course, the filmmaker coming out with their earnings. Not a whole lot of change in their shares in after hours trading. A loss in the most recent quarter of about 25 cents a share, which is better than the loss that they had a year ago here. EPS in the quarter, we should point out, coming in right around 9 cents. The street was looking for, on an adjusted basis, coming in at 9 cents. The street was looking for 4.2. Revenue, Matt, coming in light, $834 million. Street was looking for 857.
I think this this block of entertainment companies reporting is just so fascinating. And, you know, Alix was pointing out that at Paramount they had growth in streaming. At Warner Brothers Discovery, don't remember, they had growth in streaming as well. Ad revenue from streaming at Warner Brothers doubled to $240 million. So they're doing well with streaming. It's just the linear TV assets. And the question about what they're going to do is write them down and probably try and split them off, which is what Warner Brothers is already looking to do in the first place. You wonder if it's the same thing if what's the name of the Oracle guy? His kid? If he's going to do that with Paramount as well.
Well, and what's interesting, I'm looking at Lionsgate. Go back there if we can. We're pleased to report a solid quarter despite unprecedented industry disruption, the after effects of the strikes. And they say their motion picture group stars and their library performed well, though financial results in their TV segment reflected a heavily backloaded year. So, you know, I feel a little bit of a theme here, guys.
Yeah, but let's not like oversell like the film part, like the filmed entertainment revenue over at Paramount, for example. That was still down 18% year on year, coming in at $679 million, because you know what? They didn't have Inside Out 2 and they didn't have Deadpool. Not that would have counted for now. I'm just. This is my point to talk about Deadpool. That's all.
All right, guys, just watching some of these move. Paramount right now up about 1% here in the aftermarket. But who doesn't love?
Have we all seen Have you seen Deadpool?
Yeah.
I haven't seen it yet.
Oh my
Romaine?
God, it's so good.
I love that you love this stuff.
I love this stuff.
Expedia down about 3-4% here in the aftermarket. All right, maybe there's a road trip for all of us. All right, that is a wrap. Our cross-platform coverage.
A road trip? What, like across the street?
Well, yeah. All right, so it's a little walk across the street. Across platform, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Guys, we will see you same time, same place tomorrow.